All right. Very, very good morning to everybody. Happy Monday to all. And welcome back. Welcome to 2022 and back inside the markets with Engineering the Markets. My name is Jared and it is January 3rd, 2022. So happy holidays to all. We are back in full swing starting off the new year. And as a way to kind of get things kicked back off, it can be good to sort of look back a little bit more from last week's session. We talked about some relative performance throughout the year. We talked about certain sector performance. Obviously, the market was very bullish last year, and a rare thing did occur. We actually had all sectors of the S&P closing with gains on the year. Had you bought sort of at the beginning of 2021, close your position at the end of 2021, you would have netted a certain percentage of profit, of which this is a pretty rare occurrence for a market. It's usually indicative that it was sort of an all market buy throughout the year. Every sector sort of had its moment to shine throughout the year-to-date performance. And overall, if all of your sectors have ended the year bullish, it's not surprising to see your market indices and market performance ending quite strong. So 2021, we're wrapping up with a year in review. We're seeing a lot of expectations starting to come out for 2022. A lot of analysts are starting to provide some percentage expectations. Where is the growth? Where's the focus for the market going to be this year? And starting to just prepare for another calendar cycle, of which we can talk about a few things coming up, along with our continuation of our Santa Claus rally. Remember, technically the Santa Claus rally does continue into the first two trading sessions of January. So from that sort of pure start to end date, we are still within that rally time frame. Brand new calendar year to look forward to. And then, of course, something known as the January effect, which is where the market performance in January can give sort of a probabilistic edge to expectations for the rest of the year. So with that said, let's start off with just an overview of what we normally review for the week, along with looking at some of the monthly performances of our sectors. So we'll start off with just our normal expected move for the SPX. Remember, for those just joining us who may be a bit unfamiliar, what we're doing here is marking off the option market expected move for the S&P 500 index every single week. And what we're looking at is relative breaches and closes above these levels or below, outside of these levels more generally. And when the market does this, the market dynamics tend to change. Usually what you'll see is volatility expansion occurring when you start to get outside of these bounds, along with different types of dynamic hedging activities by different trading firms, as their risk parameters are often based upon staying within the expected move for the week and transacting retail or other clients inside of a normal sort of standard deviation range for the market being traded. Now, obviously, you can do this with any underlying that has high liquidity in the option market. Obviously, it has to be optionable to begin with. But we do this with the SPX because it's representative of the entire S&P. It's also the largest notional value for the option market. You're going to see the largest sort of monetary trading activity occurring in this particular index. And when you start to think about all of the different products that are offered, ES futures, the VIX, and even something like the SPY, they all sort of align to the same underlying product, which is the S&P 500 index. So a lot of notional value going through this particular marketplace. along with a lot of similar products aligning to the volatility expansion and contraction of the market as a whole. Now, last week, we had a very nice recovery rally off of previous lows that was continuing forward. And during those last couple of sessions, we saw the market volume and overall participation start to wane. Obviously, still transactions occurring, lots of people closing out positions for tax loss reasons, along with that sort of year-end repositioning back into the market, even preparing for positioning into the beginning of the year. But from the option expected move perspective, we can see that the upper bound provided as an area of stall for the market. Market wasn't really ready to expand much further, and obviously the volatility started to contract as we did close within that expected move for the week. As we come into our current week, we can see our new expected move range. We're looking at approximately a $62 expected move range based on Friday's close. And you can also see where those levels are marked, about 48.28 to the upside, and then about 47.04 to the downside, all of which seem fairly reasonable from the perspective of where we've come from, some of the expansion of range in previous weeks. And essentially, if we look at some of the intraday sessions from last couple of weeks, we could easily achieve this expected move in the course of a single day. So fairly normal range to evaluate. Nothing of note this week outside of some new economic data that we'll talk about in pre-market prep. That obviously can give some of the catalysts to provide that expectation of movement. And then, of course, we need to look at our sectors and where can we expect volatility moving forward. So let's start off with our sectors in focus. We know a lot of these names have been moving this market, but when looking at a monthly perspective, it can also give us a sense of how December traded. And I'll go ahead and add back the moving averages just to show the type of market we've been in. Obviously, very strong close across the entire market, but when we look at our strongest market cap leader, technology, we're getting a very slight close underneath a previous high. So our November high, we did not necessarily close above that. It's very close. Obviously, pennies in regards to this time frame, but it's just noteworthy to see a bit of indecision near this high, a bit of back and forth price action. We're shifting over into another market cap leader, the financials. This has been a market that has been more advantageous to be a bit more selective in your entries. Obviously, we're looking at some channel-based trading, talking things like buying this low, selling this particular high, and everything in between sort of needing different bits of information. A lot of people will start to argue this might look a bit distributive. Usually when you see upper bound ranges with higher volatility and sort of a back and forth trading activity, what you're looking for is the initial breach of either your trend line, which of course would be that channel low, along with some different signals to get you even more extended. In this case, this market continues to be trading elevated from a very strong 2021. This is sort of that initial move that we had post-election. XLV, our third market cap leader. Now this one obviously has a much different look. We're looking at a marketplace that is closed at new all-time highs, but not only that, a very convincing expansion candle away from 4 months of trading activity prior. Now, as we know, healthcare has sort of had a bit of a choppy mid to late year in 2021. That conviction has returned with the resurgence of some key names, along with the new variants continuing to be in focus for basically the news cycle and for market participants to price in to particular companies. So with this look, we're looking at one of three major market cap leaders closing at new all-time highs in the month of December, but also very strong breakout look and expansion look, of which we want to see where this can lead us for continuation of such a strong uptrend. Now, moving into our smaller sectors, sort of skipping the middle of the pack, we also know that December was a fairly defensive month. Amidst all of this bullish activity, smaller market cap sectors, more defensive in nature, things like utilities, have also closed at new all-time highs. This is a very relevant high because it is the beginning of the COVID drop. So essentially, this high has not been tested as of late, and this is the first monthly close that we've seen above this area. More specifically, we look at where the monthly closes were prior to COVID. We've also cleared this very specific settlement area from a monthly perspective, a very convincing looking breakout with volume to boot. Same idea with staples, another defensive name. Obviously, this is bringing strength to the market. It's worth considering that just because a sector is small doesn't mean that this bullish activity isn't helping with new all-time highs, but it showcases where capital flow has been focused as of recent. We're seeing defensive sectors starting to get bid higher, and more importantly, their location on the chart. It's not like they're recovering from a more recent correction. They're simply bidding these higher after seeing recovery from previous months. And then a sector that's been in focus for a lot of larger money participants, the likes of real estate. Obviously, the thesis moving into 2022 is that inflation is here. It is no longer transitory. And we are seeing asset classes like real estate, along with a slight resurgence of commercial real estate, coming back into focus. So all of these sectors performing very well in December, but more specifically, their performance relative to previous months and their ability to close higher and also to expand their trading ranges into the new year. Now, one sector that we like to focus on, because it is still a very strong sector for outperformance in the market, a bit of a risk-on type sector, has been consumer discretionaries. One thing of note is we had a very strong performance in October and November. But that November high, especially with some of the volatility we've seen in names like Tesla, has led to some short-term indecision, especially on the monthly side of things. You'll note that the bias here, at least if we're looking over the past couple months, is not necessarily bullish or bearish. You're seeing topping tails, you're seeing bottoming tails. And from the perspective of the chart, if you were to think of a 2-month chart, you would recognize that this is a bit of a doji structure near the highs. So obviously that doesn't necessarily mean that the move is over, but what it means is to be a bit more selective in regards to your entry points. Something like a weekly moving average has been a very strong area to accumulate positions in this particular industry or sector. And then more importantly, looking for those key underlyings and discussing, at least actively, where to consider getting back in, or looking for the corrections to be over and the signal to indicate that the move is ready to transpire. Now, as we shift away from our sector overview and we look at just stocks in play today, first and foremost, it's worth discussing one of our leading gappers, which is Tesla. Tesla came out with delivery numbers for Q4, and amidst all expectations, both from previous 2020 delivery numbers, Tesla has beat those expectations, along with seeing an increase of approximately 87%. Quarter to quarter, they saw increases in production and delivery numbers. And then even looking from Q4 of last year, so comparing the same quarter from both years, we're seeing estimates be beaten, and even bullish expectations, we are above those ranges. So obviously, the market is taking this in stride and starting the morning with a gap up open. Tesla already was quite bullish leading into 2022. From a technical sense, we had moved the full range of our channel. We've discussed some of these analytics in prior sessions, which of course, this being our false breakdown look, coming into our most recent swing highs back in early 2021. But all this structure has come and gone. The thing that got us into our new position and looking for new opportunity is, of course, these new fundamental numbers, along with our new gap up open to evaluate. As with everything, a gap up open is not necessarily a buy signal. Gap up opens have been faded many times throughout different catalysts and different names. But if we're looking at this as a bullish signal, the bull flag has essentially confirmed on the daily time frame. And all we want to start doing is thinking about expectations here. If the market does want to pull back this session, we'll probably be looking for recent highs as our first area of interest, given that is simply the only level we have on the daily that is worth considering for a pullback. And as we start the morning session, we can also be looking to see, is this going to be a gap and go? At which point, a strong momentum shift back into the bulls camp after a period of very normal and very low in the retracement size, that sort of consolidation. Where can we target? Obviously, with every bull flag, you kind of want to know what the size of the extension is. You can argue that the bull flag maybe started with this large gap, and you could take this measurement from swing low, sort of give you an expectation over the next couple of days. If we continue to see bullish momentum, this bull flag extension brings us right back into sort of our island reversal that we got with our two indecision and pivot candles back in the 1200s. Obviously, if this is to be rejected, we want to see a strong selling conviction come into the market. And one of the things that could really neutralize this momentum is the idea that not only do we come back and close this opening gap, maybe over the next couple of sessions, but also getting back into our Friday close. That would, of course, be a very poor performance from bulls to continue this bullish uptrend. And obviously that retest would be worth considering for shorter term trades, but obviously the upside potential becomes questionable from that time forward. So that's going to be in play. We also want to be looking at correlated stocks that like to move whenever the main underlying is in play. One stock that's been in focus, both with a recovery in Chinese names on Thursday's session, but also strength in the core business model for electric vehicles, has been NIO. NIO starting off the morning with a strong open. We're seeing similar pushes to the upside. And once again, sort of that bear flag thesis, the idea that we have cleared swing highs, we have broken bullish, and ultimately, depending on how you measure these extensions, taking these as possible upside targets over the next couple of days and looking for these areas to confirm that the move is over, looking for bigger or better setups for the next play, of which this particular extension brings us right into the 50 period. Seems like a likely spot if this move is to continue. So keeping things simple, keeping things straightforward, we have these stocks in play to watch today. But on a larger note, a lot of stocks did recover on that Thursday section. We'll take a look at just larger ETFs, things like the Chinese names starting to see a lot of recovery. This is I'll just do a more common one. There we go. I think I actually had the wrong ticker there. I apologize. I'll just do GXC, just showcasing the Spider China ETF. Large move near the lows. Not necessarily the type of volume quite yet, which is why we're waiting for some confirmation. But we're seeing names across this particular sector with similar performance. The likes of our e-commerce names coming well off the lows on that Thursday session, putting up potential for those bull flags once again, and just looking for that next phase of the move. Obviously needing to get over shorter term trends in order to reverse the longer term thesis. We also saw a lot of beaten down names, what I'll call names that are down on a year-to-date performance, see a bit of resurgence on that Thursday session. Some, of course, are better than others, but pretty much every stock that had poor year-to-date performance got a bit of a boost on that Thursday session, of which picking your favorite, looking for ones that have actually maybe confirmed this possible trend change. And then, of course, if this is to be negated, the marketplace will easily sell into this and look for new lows in what is, in most cases, a dominant daily, weekly, and monthly downtrend in some cases. So these names are on focus for January. If the market is to outperform, we may need the assistance of some of these more beaten down stocks, at which point looking at different strategies to play in these names as the trend really hasn't changed quite yet. Some of them are giving room for that trend reversal, but some of them are simply bouncing. They're not doing anything of note from a more technical or even a breach of previous swing highs. At which point, depending on how you trade these names, will often dictate sort of your success moving forward. One idea we proposed last year inside of the chat room is the idea of looking at the option market, getting prepared for some either cautiously bullish type plays, some optimistically bullish, or even in the case of maybe a fade back to the swing lows, playing sort of a neutral to non-directional strategy. The best way to consider this is sort of breaking those strategies down, organizing them into those different categories, and then letting the market sort of dictate which one you should be thinking and applying to each of these stocks. For the more cautiously bullish, you might be thinking maybe selling some puts, some cash secured type puts. If you're looking to accumulate positions, this can be a very advantageous way to get into some of these possible value type plays, but also to allow the market to pay you for your patience and to pay you for waiting for your strike, waiting for the price that you wish to accumulate at. Some more optimistically bullish plays would be the form of something like a back ratio, where you're essentially saying that the market hasn't really proven anything to you, but you think that there may be some upside moving forward. And what you often want to consider is that if the upside is there, the market may reverse quite strongly, as shorts often need to cover, and usually new bull participants see the trend change and want to participate in what potentially could be a very significant low for the market. At which point, often what I like to do is look for those sort of very close to zero type debit back ratio type plays. An example in Zoom here would be this particular stock offering about a $9 premium for a 185 call. If I wanted to be a bit of an optimistic bull, I wanted to say maybe 185, I could sell this call and use it to buy, oops, gotta hit my buttons right, use it to buy about 200 calls, obviously with about 25 days to expiration on this trade. Now, it's a very straightforward strategy if you break it up into pieces. The idea here is that I'm selling a $15 wide call credit spread, 185 to 200. I want the market to get past 200 in order to start making some profit. But I'm also using this call credit spread to facilitate buying a $200 out of the money call, something that a lot of traders will be interested in doing if the market does turn in their favor and it has a lot of momentum. So what this looks like is when you look at an analyze tab, you're seeing a market where, yes, you do have to get across what I like to refer to as a valley of death. My platform is freezing up on me. But if this market can get moving, and even if it starts moving quicker than that time to expiration, obviously don't want to hold this all the way to expiration, but you can actually facilitate a bit of a bullish play, something with almost unlimited upside, as that's kind of what you want for the optimistic portion. But if you are wrong and the market continues to sell against you, you can set these up to actually collect a bit of credit to be essentially zero if the market does make new swing lows. And then, of course, your risk being more focused on the middle strikes, sort of where you sold, or sorry, where you bought back your out of the money premium. And with these type of strategies, you can construct them in various different ways. Doesn't have to be a 1 to 2. You can even think about, okay, well, I want to be even more optimistically bullish. So instead I can sell, for example, the 185, can go further out and buy something like 3 210s. Obviously here, still collecting a bit of credit. You have to get a little bit further in regards to your bullish play, but your upside is much higher if this market does reverse and reverse strongly. And this is sort of the thinking that you should be doing as an option trader for this year. Not only how to get involved in the market, how to apply different option strategies to your technical, fundamental, quantitative thesis, it doesn't really matter. It's the idea of expectation. Are you bullish? Are you bearish? How bullish are you? Is the market proving that bullish or bearishness to you? Are you neutral? Is that neutrality confirmed with a trading range? Can you take advantage of that range while it exists? And then once it moves away from it, can you change your thesis, change your sentiment, and apply it to the option strategy that best fits the structure of the chart, the quantitative nature of the option market, or just the overall sentiment of the market as a whole? These are going to be some key themes that we'll talk about this week moving into 2022. We'll look for where those opportunities apply, how to get involved with them, and how best to step in, step out, and what sort of criteria looking for different plays. So with that said, my name is Jared. This is Engineering the Markets. Welcome back. Get ready for another exciting year. Hopefully you've enjoyed all of the content we've been providing for this show. As always, stay tuned for pre-market prep, and I look forward to talking with y'all more this week. Have a great Monday session, and I'll talk more then.
All right. Good morning, everyone. Welcome to the pre-market prep. I hope everyone is having an amazing morning. Hope you guys had an incredible weekend. Hold on a second, guys.
Good morning, brother. Yeah, we're not in the room.
Yeah, I just noticed that too. Let me get my mouse over here and turn that on. All right, sound check in the room, guys. All right, good. Just want to see, make sure we got sound. Okay, perfect.
Yeah, I can hear you.
All right, good, excellent. All right, guys. Good morning, guys. Welcome. Hopefully, everyone had an amazing New Year's, and welcome to the first pre-market show of the year. So let's take a look here, guys, at our gappers this morning. So it's going to be a fun week, I think. It's going to be a fun week. Already, our gappers list is looking much better than when we left off last week, Norm. A couple of rough days, trying to get a decent gappers list. Today looking slightly better than what we had on Friday and Thursday, that's for sure. So we'll get into what's happening here. I see Tesla, NIO, a lot of EV stuff on the gapping up list this morning. A couple of seems to be Bitcoin type plays in here. Mara, I see some foreign stuff as well. So we'll see. Gapping down, only one ticker, APAT, LT. I'm not sure what this is. Low flow at 15 million. We'll get into what's happening there. But before we do that, let's look at the market pulse. I know the SPY has been pretty nice this morning so far. Norm, give us the latest and greatest for today and possibly this week.
Yeah, I mean, technically, we're still in the Santa Claus rally. It goes the first two trading days of the year. Just the way that is, they mark the dates on that. So technically, still a couple of days of that. We will see how January trades. A lot of times, people feel like that will give an idea of how the year is going to shape up, how people are setting up their portfolios for the year, how funds are doing such to start performance of the year. So we'll see how it goes. We've got a couple of data points out today. Market manufacturing PMI at 9:45, construction spend at 10 a.m. Shout out to Harry K, awesome member and friend. First super chat of the year. Thank you, Harry. Thank you very much. So the EVs are up. They all have delivered their, well, not all, I don't think all, but the ones on here have delivered sales results for December, and some of them have given business updates and guidance. I got to tell you, if you look, there's a little bit of a divergence here. If you look at KWEB, it's up a little bit. That's a ETF that covers more broadly the Chinese market. They've all been hit, and it's not just on EV stuff. It's on regulatory issues that we've talked about for months here with China and possible delisting and all kinds of things. So I don't know how much I trust these pops on the Chinese EVs. I'll be very careful because, like NIO, for instance, is extremely strong right now, but we'll see which way it goes. So.
Yep, absolutely. We'll see. It should be interesting for sure. Harry, thank you so much for that super chat. First super chat of the year. Yes, you do get that. Happy New Year's to the BBT family. Wishing everyone
It's
a
$5 to
prosperous
wear that crown for an
and green
entire
year.
365 days.
That is not bad. Yes. All right, guys, let's take a look at this gappers list. I'm going to go ahead and remove our watch list from Friday. Let's make, wrong selection. Let's make some rows in here. And we will start here with IMMX, 1 million shares flow. So very low flow stock here. Excuse me. I think we've seen this before in the past, guys. They are up 50%. Not a huge
IPO'd about
fan.
2 weeks ago. It's a biotech.
Yeah.
Low float. They did have some FDA action this morning.
Mhm.
I can't recall exactly what it is, obviously. Market's taking it well up 50%, but that's a white knuckle trade.
Yeah, it sure is. And again, I'm not a big fan of the ones that pop up like this and then move downwards. You got to be careful with it, but definitely very active. We'll keep it on here. IMMX, low flow of the day so far. Here's Tesla. We've been talking about Tesla and NIO, both in play, doing very well this morning. We'll add Tesla here. We will add NIO as well since we're talking about that one. That also looks very good. 1.7 million, up 4.3. Very nice this morning. Heading down, we got BBIO, one that's been on our gappers list quite a bit after a huge gap down here. So this morning, up 4%, 102,000, not a whole lot of volume I have not been keeping this one on my list. I'm just going to go back here and see what's happening as far as the intraday goes. Looks like Friday was a little bit of some fun there. The day before that, you have some movement here as well. Not sure. Maybe a possible for now. BBIO. We'll come back to that. LI this morning, they are volume is very light on LI at the moment, so I'm gonna skip on it for now. Volume is very light on it. Here's Mara today. They are up 3%. Volume is extremely light. I don't think it's much going on here right now. We're gonna keep this off the list as well. TSM is a foreign stock. We usually don't keep this on deck, so I'm going to keep this one off also. IonQ is could be messy, nothing good there. XPEV, let's see what's going on with XPEV here. I think XPEV could at least be a possible here on XPEV. Excuse me.
Yeah, I'll tell you. So we've listed out every Chinese EV stock I believe that there is on the gapping up list. It makes up half the gapping up list. As you said, some of them are a little bit lighter on volume. I mean, NEO with 1.8 million shares traded almost, and you've got XPEV. I think it just me speaking for myself, I'd pick one of those because those are the ones if you're going to trade this sector, those are the ones I think you're going to get the moves and they have the volume.
Yep, absolutely. I got NEO here, guys, because that's 1.7 right now. More volume. XPEG will probably get some of that. I'll put them as a possible for now, but definitely NEO on the list this morning. How about Lucid? I know Lucid was explosive last week, a couple of days. Anything going on this morning with these guys?
They were on the gappers a little bit earlier.
Yeah, up 1.7.
Another good one to watch.
Yeah, they're just shy of that 2%. This could be a good possible. Let's see what happens here. They've been very explosive, especially last week, guys. We saw a beautiful, actually, they traded very well on Friday. This was my trade on Friday, so they did very well there. And on Thursday, they had a nice little run as well. So we'll see what happens here on Lucid. Gapping down this morning, APLT. This is down 26%, really all over the place right now as far, let's get the daily in the bottom to show the correct charts. Here we go. So 1.7 million down 26%. We'll have to see. This thing was halted already, maybe on news, I assume. Yeah, so it's resumed now. We'll see. Let's keep it on.
They had it's a biotech and they had an update on something. So they did have news this morning. They were halted on its reopen, but
and actually I just saw the float on this is 15 million. So I got to put it down here next to the low flow stuff. We'll see what this does. We'll see. Okay, let's stop here. And I saw NTRB popped up in the down gappers list for a second there. Shot back up. This thing was wild on a Friday, guys. I mean, it was just insane. Went all the way from, I think, $3 in the pre-market to about 5-7 before the market opened. And then from there, it shot up over to 13. So just insane run. Low flow, guys, I believe it's like 5 or something. Very low flow. NTRB. RB. Here we go. Yeah, 5 million shares flow. So again, they got some volume right now. They're down 1.6. Just be careful with that one. I'm not gonna add it to my list just yet. I think the second day might be a little bit funky here. If they go green and they get back towards the high of the day, then that could be a whole lot of fun. So you know what? Let's put it on here and look out for that. Let's see if that does take place. That's the only way that we will really be into this one, if it can regain some of the levels that it is losing now in the pre-market and that it lost before the close on Friday. All right, excellent. Let's take a look. Norm, anything you like on your end this morning?
On the lower float side, CELZ. It was good earlier. It is one of those that popped and sold back off. So I don't know if it'll make another run.
That's Z?
CEL Zulu.
Oh, okay. Here we go.
2 million shares.
Yep. Let's throw that on here. All right, there we go. 11 million right now, up 54%. Couple of runs in here. Let's see if that can keep going. So definitely got the volume. We'll keep an eye on that as well. All right, guys, let's take it to the room and let's see what you guys have this morning. Let's start here with Bill D. Oh, yeah, you already gave us APLT. Yeah, we have that one. So a hold on the drug approval to the FDA. So, yep, we have that on there. That's good. CELC Ross, that's the one that Norm just gave us. Let's scroll down here. Megan, Happy New Year to you as well. Baba, let's take a look at Baba here. Baba this morning, they are pretty much flat. volume 203. Yeah, I don't see anything crazy right now. I like the range in the pre-market right now, dropping nicely and just getting a little run here. Is it sitting right on the previous day close? Yeah, sitting right on the previous day close line.
Yes.
Yeah, let's see. We'll come
And
back
it's
to that.
right. It's sitting right on the 9 on the daily. So we're gonna see if that's gonna
Yeah.
support if there was if that big day last Thursday was warranted or not.
Yeah, the daily does look very good on this, by the way, too. So, yeah, I like the way this is sitting here. Let's see if that's going to amount to anything. Apple will probably be a good one to watch as well. Let's take a look here. Apple this morning, 543,000. Again, it's just been moving sideways a bit here. But I think it'll be a good one to keep on deck, especially since we don't have a whole lot that's really in play at the moment, right? So the overall market, ticker Apple is good to watch it there. BBIO, I have BBIO here as a possible. And the volume is just not there, right? They've been trading somewhat decent on the daily. If you look at the daily here, they had a nice little run after this gap down. It's trying to close this gap slowly here. That's a big drop from 40 down to 12. They're up at 17 now. No volume at the moment. We'll see if that can pick up. Alfredo, you know how we feel about Ford. You know, you can barely get any movement here. They are up 1.7 this morning, 3.5 million. I know maybe EV conversations since they're in that getting into that as well, maybe, but most likely Ford is something that we really don't watch. Just doesn't move a whole lot unless they have some really crazy news, right? They got to have something popping them up. Chris MC giving us AMD. AMD today. Yeah, I think you could watch AMD. AMD has been good to watch. This morning, 365, not up a whole lot. Yeah, I think AMD could be a good one. What's going on? Thinking of NVIDIA as well. How about MU? MU's been making some noise. Look at NVIDIA, though. NVIDIA's pre-market action does look a little bit better, right? So I like NVIDIA's pre-market action today. We're going to throw that on there. And I know MU has been making a little bit of noise since they had this gap up about 2 weeks ago, right? So we've been seeing some kind of pushes here. Intraday, though, it hasn't been all that great. Even on these big days, the moves have been, it's just been very slow to get going, right? Although it's moving upwards northeast here, it hasn't been a great intraday trader, at least for me. So we'll keep it on here. Well, I'm not going to keep it on. It's very quiet right now, only 94,000. But this one has a nice daily, guys, doing very, very well. MU coming alive a little bit here in the last month. NVIDIA, Roblox, RBLX. Roblox this morning, daily's interesting. Volume is very light right now. I don't see a whole lot going on this. So I'm just going to keep it off for now. CLF, no, what's this? Clorox? Is this Clorox? I know Clorox is.
Cliffs.
Okay. Because I know Clorox doesn't trade very well. This one here, I don't know these guys, but no volume, guys. Only 54,000. So not a whole lot going on there. All right, thank you guys. Let's take a look over one last one. Then we'll look at what's going on with YouTube. Zillow, no volume on Zillow right now. Pretty quiet at the moment. Only 20,000 shares traded, so not a whole lot going on. All right, let's start here with Salad. You're giving us Apple. I mean, we have Apple already. Yep, Apple is good, guys. We have that one. Colton, you're giving us Ford. We have Ford already, so I see a lot of you guys throwing out Ford. Any news on Ford? You guys have this on your deck here, on your list, so we'll see what's going on there. AMD, we do have Disney, maybe for later on, but not much going on right now in the pre-market on Disney. Rivian, RIVN. Pretty quiet right now. I know the stock can be very explosive. It's kind of like a Lucid where it can be quiet and then take off. At the moment, not seeing anything great for me to add it on here, but I'm sure we'll be looking for that one in our scanners. If it does hit our scanners, we can tune into that one. All right, that's what we have. We're heavy on just, again, the tech EV type plays here. We have Tesla, which looks good. We have NIO, looks very good this morning. We have Apple, which doesn't look great pre-market. We've seen better, but we know they can get going. And we have AMD. So not the best blockbuster list at the moment, but I think we can find something better as the morning continues here. So we'll stop here. Yeah, we have AMD. We have NIO. That's good. I'm good. Leonardo, last one. We'll look at PayPal. And no, I don't think PayPal is really in play today. All right, excellent, guys. Let's go over to our community events and announcements. We'll come back and fine tune this list after this and also after Crata this morning.
All right, guys, quick weekly rundown. Swing trade discussion with Brian's usually at 2:30 Monday afternoons. Heads up there, the onboarding and tech classes are sliding up by an hour for 2022. That'll be at 7 p.m. beginning Eastern time for the onboarding, and then 8 p.m. technology. Tuesdays and Thursdays, you've got trade review with Eamon at noon. And then success webinars at 8 p.m. on Tuesday, psychology 8 p.m. on Wednesday. Those times do change sometimes if we have people in time zones that are either European or such, and way later for them. Sometimes we'll make those a little bit earlier at like 5 p.m. And then mentorship on Thursday with Andrew at 11, Ed at 4:30, and Thor at 8 p.m. And then crypto with Jared on Friday at 11 a.m. All right. Starting off, first success webinar of the year tomorrow night, 8 p.m. is John talking about trading breakouts. And then the following week, 8 p.m. Eastern on Tuesday, Ed will be discussing his option flow. If you've been to Ed's room, you see one of the scanners that he uses that we don't use in this room is picking up large options trades and shooting them out in real time. He uses that to look for stocks in play throughout the day. So it'll be an interesting webinar by him. All right. Then Wednesday, 8 p.m., you've got Dr. Kenneth Reed talking about market dynamics part 2, matchers and mismatchers, talking about general types of traders, either ranges or trend traders. And then next week, Kreda will be doing part 1 of her Mental Edge series, how to think and trade like a professional athlete to gain a mental edge in the markets. Excuse me. That is at 5 p.m. As I mentioned, she's in Europe, so that'll be on the 12th, Wednesday at 5 p.m. Eastern. If you have not checked out stocktradingsimulator.com, be sure to do so. It is our free web-based replay simulator. While you're there at the bottom right, you can sign up for emails from Eamon and Simon. They don't hit you too much, just once or twice a week, giving you homework assignments to do in that replay simulator. And if you're watching on YouTube, haven't been in the chat, first of all, please smash that like button. It really does help. And you can use the promo code premarket24 if you go to bearbulltraders.com. Scroll down the page until you see that test drive now button. Click it, fill out the form. It will only bill you one time, and if you use that promo code, it will take the price down to $24. It will cancel itself after 7 calendar days, 5 trading days in the room, and for a day or two longer, we still have the holiday sale going, 40% off, plus 1 month of free DAS simulator included. Use the promo code holidays40 to get that. Kreda, good morning.
Hi, Norm. How are you? Happy New Year.
Happy New Year to you. I hope you had a wonderful New Year. I know you just had a kid, so I don't know how much you partied.
Not at all.
Exactly.
I
remember well. I think my son just turned 5 a few weeks ago, and this is the first year I've been up anywhere close to midnight ever since he was born. So I understand that. Anyway, well, Happy New Year. Hope you have a wonderful 2022. And today we're talking about emotions not being the enemy of trading. So go ahead and take it away.
Thanks, Norm. So yeah, I thought it would be good to just revisit one of the fundamental I suppose, philosophies of trading or trading psychology. So what we want to talk about is why emotions are not the enemy in trading. And it's a useful thing to recap because often people can approach their trading like they want to actually be able to neutralize their emotions. So they think that if they can just be there in the market, be trading and not feel any emotions and trade like they have ice in their veins, that's the holy grail. Like that's what they're trying to achieve. But the reality of it is that that's not possible because we're human beings. So you can't just chop off a part of your humanity, your emotions, and leave it to the side and go into the market and trade like a robot because it's just not possible. So when people are actually seeking to trade as if they're emotionless, really what you're talking about is actually being able to master yourself. And in order to master yourself and be in control of your actions and to be able to take the right action despite whatever you're feeling, you actually have to get in the ring with your emotions and your subconscious and be able to find a way to master yourself. And there's a reason why only 1% of day traders, this is coming from research, so it's not my thoughts on it, only 1% can actually predictably profit net of fees, and why 80% will fail within the first 2 years of actually starting day trading. Because it would be not easy, but it would be straightforward if you could just master the technical side of it. It would take time, but you'd get good at it, you'd practice it, and then it would just flow. If it was that easy, more people would be day trading for a living, and it would be very straightforward. The reason why it's hard is because once you get in the ring of the market, you're bringing yourself in there. So anything that's in your own psychology, any way that you trip yourself up, any limiting beliefs that you have, any negativity that you feel about yourself is going to show up in your trading. And so it's not possible to just say, well, I'd love to neutralize all of that, park it, and just trade like a robot, because you can't do that. So what we're talking about in terms of mastering yourself is actually, one, being able to still trade and take the right actions despite whatever's going on. So in terms of your emotions. So that requires you to have an awareness of what emotions you're actually feeling, and also then to be able to step back from them, be an observer, and know that you can still take the choice to take the right action despite what you're feeling. So that's one part of it. But if you want to take it to another level where you're truly mastering yourself, the idea is that no matter what negative emotion you're feeling in the market, so let's make this a bit more concrete. Maybe you're feeling greed, you're feeling anger because a trade went against you, you want to take it out on the market, you want to make your money back, maybe you're frustrated, impatient, all of those feelings, they will lead you to take actions that are detrimental to your trading. So in the first example that I talked about, the skill is to be able to know that you're feeling those things, be able to actually bring conscious awareness to that situation and still choose the right action despite what you're feeling. So that's one level of awareness. But to take it to the proper mastering your trading, mastering yourself level, you want to be able to understand why you're feeling those feelings, what's behind it. And usually, as we talk about all the time, it will be that there's something going on in your subconscious that is getting triggered by whatever's happening in the market. So in that sense, you're bringing yourself to the market. Most likely, you will see this in other areas of your life as well. So if you're someone that tends to be very angry when you're trading, if things go against you, you'll probably find that that happens to you in other areas of your life, relationships or road rage or whatever it is. So there's something in there in your subconscious that is getting triggered, and that's causing you to feel these emotions to such an extent that it's impacting your trading. So the best way to resolve that is to get in there into your subconscious, develop really excellent self-awareness, and understand why you're being triggered, why the emotion is present, how it links to other parts of your experience, maybe past experiences with trading, all of that. Get to that level of understanding of yourself. And when you get there, you will be able to then transform the emotion. So once you understand it, you can resolve it. And then when you're in the market and you're actually trading, you won't feel those emotions to the same extent. So they'll lose their charge. Even though you might get a little bit triggered, you won't be triggered to the point where you actually take a detrimental action that will affect your P&L. So you can still feel angry, but it won't be to 100%. It could be to the level of 20%. And so you won't impulsively act on it. So that's the holy grail that we're talking about. It's not trading like you've ice in your veins and trying to neutralize your emotions and just cut yourself off from them. Your emotions are actually valuable information. And that goes for every part of life. So I think in our society, there is a tendency to kind of shy away from emotions. So you'll see that if people are very stressed over a long period of time, sometimes they actually get physically ill because of it. So it weakens our immune system. Whereas if those people actually dealt with the stress head on, dealt with their emotions around whatever is stressing them, they can resolve it much quicker. So it's the same here. You want to identify your emotions, resolve any emotions that are going to trip you up in your trading, and become much more I suppose, self-aware and in tune with yourself so that you can actually choose not to follow the impulsive emotions and take the actions that impact your P&L. So just to bring that into a bit of a concrete analogy, it would be like saying that, start of a new year, so loads of people are on diets, that you want to get the beach body, but you want to sit on the couch in order to do it. You're not prepared to do the work. So even though it's difficult and it can be uncomfortable to go digging into your subconscious and really analyzing your feelings, it is the way to get there. That's how you get to your trading goals. And that's the reason why less people, like the minority of people, actually make it to being full-time professional day traders, because not everybody is prepared to do that work. It's messy and it's uncomfortable, and it also can be a bit of a blow to our egos, having to dig into all of that stuff. So the people who are prepared to actually get to the bottom of their own subconscious and who are prepared to put in the work to actually master themselves are the people that are going to thrive and triumph in the market. So rather than aiming to trade like you've ice in your veins and, like you're emotionless, aim to master yourself and face those emotions head on until they lose their power over you. So I hope that makes sense to everyone. And just to help with that, so it can help to have practical strategies in order to do that. So I'm going to release another 2 audios to help people out in that sense. So I've got one coming out this week. It's Profit from Pressure. So that's a visualization. I'll post it on YouTube and share the link. It's free. So that actually guides you through being able to switch around your experience of pressure and how you interpret it, and to turn it into something that actually can help you to thrive. So when you're feeling under pressure, you recognize that as something that is going to spur you to the peak of your potential. So it's like changing how you think about pressure. That's one. And the other one next week will be about quieting your inner critic. So lots of people have a negative voice that's in their head that kind of plays on loop in the background and undermines them, especially when they're trading and things go against them. So I'm going to also have a visualization that will help you to quiet that voice and bring a more supportive, authentic voice that helps your trading to the fore. So those are the 2 resources to help you with this.
That is an awesome start to 2022, Creta. I've known so many people that have tried trading over my journey through this, and I swear everybody comes in and they realize emotion and psychology is like 90% of it once you get the basics down, and they just try to get rid of it and act like I can act like I don't have emotions. That just does not work. So excellent discussion, guys. Don't forget to follow her on Twitter. She is Creta _perform, correct?
Yeah,
that is her Twitter. Yep, that's her Twitter handle. She puts out the videos, links to those that you're talking about there. You can also check out our channel and her playlist there. So, Creta, thank you very much.
Thanks a lot, Norm. Bye.
Have a great day. You are muted, brother.
Here we go. Thank you, Creator, for that. Guys, over on YouTube, let's make sure we give Creator a nice thumbs up for that. So appreciate that very much. All right, guys, let's take a look at what we have here. So I have Tesla this morning looking good. Nice gap up today. NIO, also great volume, 2.1 and climbing up for 4.7. So that's looking good too. We have Apple, which is taking a little bit of a dive here right now, but that's also very active. I have AMD.
Whole market just
yeah, right. I see everything's
gave back
going
everything.
south. What's going on? What's the SPY doing? SPY's dropping a little bit, so that's what's causing that. So, all right, so we got a decent list. Let's go ahead and get some levels in here, guys, and be prepared. Let's start with Tesla this morning. Towards the bottom, we got plenty of stuff going on here. Highs and lows from the last 2 trading days. I'm gonna add the low of the pre-market at 111.06, right? 11.06 there is the low of the pre-market. High of the pre-market all the way at 1137.95. Might actually be 1138 actually. And then slightly above that, we do have a level here over at 1170. So plenty of levels here for Tesla this morning. Again, very active, guys, up 7% with 1.4 million shares traded. So you definitely got a lot of activity happening here with Apple this morning. Same with NIO here, guys. A lot of activity as well. Price action right now sitting at the highs of the last 2 trading days, which is kind of right on there at the moment. Above that pre-market highs, we are looking at 33.59. Slightly above that, we are looking at 34.68, and then above that over at a 35.53. So plenty of levels there on the daily towards the top, and then towards the bottom, guys, you have the highs and lows from the last 2 trading days. You can add this day here. There seems to be just a couple of days opening, closing right around 32, 36. You also have a lot of consolidation happening in the pre-market around that price target. So I'm definitely going to have that on there just in case it's going to mean anything if we do decide to come back down here on NEO. So that is NEO. Here is Apple is trying to go red. So Apple right now towards the top, guys. Plenty of stuff, highs and lows in the last 2 trading days. Pre-market high this morning on Apple is going to be 178.50. So that's good there. If you were to lose this great area on the previous day close here, this great area of support. Next main level I see on the dailies right over here, 175.41. You have tons of days slamming against that 175.41. Below that, the next major level I see on the daily is going to be this 172 as well. Got a lot of support happening there also. Look at these wicks coming all the way down here, finding support at 172 and bouncing back up. Same thing here. Big red day goes through it, comes back up and finds the close of the day there at 172 as well. So again, you got a lot happening around that price there. So let's see, we're in the red officially on Apple. Let's see if that's going to continue. We're going to get a bounce. Let's see what's happening here. Here's AMD. AMD also very active. The last couple of days they've been trading very well. High of the pre-market 146.27. Below this previous day close, highs and lows from the last 2 trading days. Below the previous day close, we have a level here over at 140.35. Below this, obviously very clean level here, 130. But in between here, you got a date here where you kind of got a lot of touches as well. 137.12 looks decent as well. Again, not a major level like this one here where you got an extreme drop and then change in direction. So that is nice off that 132. But you got a couple of wicks, slamming against that 137.12 there. So towards the top, just in case, right, we do have on the daily 152, and then up here, very clear, 156.55. You can see how many days are slamming up against that as well. Next, we have Lucid. Lucid kind of stuck between the highs and lows of the last 2 trading days, right in the middle, obviously, really at the moment. Previous day close coming up on it right now. It is continuing to drop. I won't mark the low of the pre-market. Let's see if it's going to get to the previous day close. But I will mark the high of the pre-market here at 39.01. And I think that's all you need on Lucid. If you look at Lucid's daily, very, very interesting. We've been stuck between 40. It's the high on this consolidation, and the low of this has been 36. A few times we did go below that, but we came right back up. 36.61 has been the range for Lucid over almost the entire half of the month of December, even more. Here we broke out a few times. We managed to get right back into this zone. So let's see, heading back here.
It's been amazing to me for like the last month how choppy and non-moving Lucid was after some of those days when it was just
it has not been in play. We only had it, I think, yesterday and Thursday just because of the move that it did. But you're right, it really has not been trading well. So we'll see what it does here, guys. It's kind of stuck within this range right now. Couple of possibles. We have NVIDIA, we have XPEV, we have BBIO, which I'm not a huge fan of. But again, on the daily, they've been climbing nicely, slowly closing this gap here. We have BABA here, which is not doing a whole lot neither. And then we have 4, which is, again, just also another one that doesn't move very well. But we'll see where it goes today. All right, I think that is what we have so far. No moderators lineup yet. It's a little bit early, only 9:04, guys. We've been finishing up very early the last couple of days. I noticed that. Let's take a look here. If anything that you see, Norm, that you like.
No, I will. We just got a message from Ed. He's got pretty nasty storms, I guess, going through his area. He just lost power. So if anybody happens to be trying to get into his room, I think his room is open. I think he's been in there, but I think he lost power afterwards. So if anybody heads over there and there's not anything going on, that's the issue. So
all right,
maybe one of our mods can hop over there and let the people know what's going on as well.
Yep. On our gappers list, on the gapping upside is getting a little bit bigger. I see some stocks coming in here. We have Plug. Let's see what's going on with Plug there. Popping up 2.1, but again, volume is very light. West Fargo is coming up here as well, up 2%. What's going on with the banks? Citigroup is up 1.1. How about Bank of America? So you got the banks popping up a little bit. Nothing too crazy though. Citigroup does look interesting. I'm gonna add it to my list just in case there's anything happening there, depending on how this market is going to open. GM is here up 2%. Just looking at stuff that has got popped up into our list here.
Barclays just came out and announced some upgrades on financials. I know Wells Fargo, but I thought there was another one or two maybe that they did something on this morning.
See West Fargo on the list as well. I'm going to add that on there just to see how that is going to play out. So they're actually up 2.1, so that's good there, West Fargo. IonQ we looked at. We don't like that one as much. SKLZ, no good. And then we have a couple of Bitcoin stuff here. I see Mara. Mara doing anything yet? Nope, still not doing a whole lot. All right, let's take it to the chat, guys. I see you guys throwing out Facebook. What is Facebook doing? Facebook doing anything? No, it's pretty quiet. Facebook is pretty quiet right now. Roku's got a pop here, but still nothing to be excited
Speaking of
about.
things that used to be in play well every day, Roku was.
Yeah. Oh man, Roku was good to us. That's for sure. It was very, very good to us. Has not been the case lately. I just see this one big pop here, but again, no volume, so I don't think anything of it at the moment. On Roku, Facebook, we looked at Tesla. Yeah, Tesla is oh, look at Tesla. It's on fire, guys. Tesla's definitely in play. 1.5 right now, 7.8. Breaking out of the pre-market highs here at 1137. Let's see if that is going to hold. Is Neil doing anything? Neil looks like it might
kind
be
of
following
stuck in this
something.
range
Yeah,
right now,
stuck
but
at
we'll see.
33 here. Let's see if it does a sympathy move there with Tesla at the moment. All right, see some moderators list coming in, so we'll give it a couple of more minutes to see if some more come up there. Disney, we looked at Disney. Is anything going on with Disney? No, I don't see anything going on with Disney really. It's really light on volume, so I don't think they're really in play today. Not aware of anything. Roku, we looked at Ruby ITOS. Oh no. ITOS is no good. Look how this is foreign. Might not be, but it looks really bad though. ITOS 26 million. Yeah.
No, it's
not a
it's
fun.
it's no.
And the
Just
volume
got
too
no
on the
volume.
daily.
It's not foreign. It's just a biotech with no volume.
Yeah, pretty bad. BA has not been in play lately. We had one good day here outside. That's just been very choppy. This morning I don't see anything good on it neither, Jay. So I'll keep this one off the list for now. Again, it might be one of these days where look at the volume we have on these stocks here, right? They have great volume. They're moving very well. The same areas that were moving well last week. Tesla, the EV stuff. Lucid was great last week, a couple of days. Apple, AMD, Nvidia was good last week. So we're in that same tech heavy type plays from last week. We'll see if anything else pops up today. But for the most part, that is what I have on here. And then we'll keep our eyes on the scanners. All right, let's see what the moderators have this morning. Let's bring that list over. Let me resize a few things here and bring that over to you guys. Let's turn this off so you don't get the mirror effect. And then I'm going to bring this right over here. You should be able to see that. Yep. All right, so we have Thor. You're looking at NEO, XPEV, Lee, AMD, and also Apple. Jared, you're looking at Tesla, NEO, and other EVs, financials, and bonds dropping on TLTs at ETF. You can look at Dima. You're looking at Apple, AMD, XPEV, and Lee this morning. We'll see what the moderators are having their list as well. We'll keep this on here. There's Eamon, potential longs, Apple and PFE, very risky, and potential shorts, PLTR and SRPT, also very risky. So be careful with those two there. So that is Eamon's list for today. And where's Phil? Phil? Where's your list, man?
Oh, Phil. We need your list, Phil.
Yes, we do. But that is what we have, guys. So there it is, the man, Brian. Very, very tight list today. It kind of tells you what kind of day it is. Brian only coming in with Tesla, NEO, IMMX, and that's it. That's his list for today. And IMMX is actually the one for fun. He didn't type it in there, but this is the one for fun today because it is It is moving very aggressively, very careful. Back up here, guys. So it did sell off when we looked at it earlier, and it's now looking really good again, hitting the highs of the day, breaking out there. Got good volume, got good movement, good price action. This is nice for a low flow this morning. So that is looking very good. Let's take a look at the rest here. APLT, no, I don't like what's happening here. Let's get rid of it. It might just be choppy. NTRB, this is becoming no good now. Once you start losing it and selling down like this in the second day, it's just no fun. If you could stay green and get back towards the highs of the days, which I don't see that happening, it's losing too much, maybe, but right now we'll get rid of it. CELS, this one still got some potential. It's the first day, and if it holds here and it goes back up, this can actually be nice. So we'll keep that one. These two are really the ones that are looking good for low flow stocks this morning, with IMMX leading the way here pretty nicely. Okay, let's see what else we have here. I think we are pretty much set, guys. Rivian, Bolat, we did look at Rivian earlier. I didn't see anything good on it, but again, this is one of those stocks that can be very explosive.
Man.
I don't trade it. It's a very
I have not traded it yet.
Yeah, I don't. It's very risky. It's very tough. The price action is crazy. I don't see anything good on it right now.
So BMW E36 on YouTube is asking about Tesla, and he bought some. It's a little hard to understand, but at 1050, blah blah blah. It's really hard to. I have no idea what your strategy is, your time frame, your risk tolerance, or anything. So it's very, very hard to answer a question, anything like that.
Absolutely.
Just
his question.
I wish I could help you. Wish we could help you, but there's nothing we can really say to that.
His question for those over on our members
at least
is:
you're green.
Should he take profit now that he's up so much? Right.
Depends on a lot of factors.
Yep. Depends on so many things. So we can answer that for you. In fact, if we tell you to take profit now, this thing probably goes to 1,200 and you hate us. And if you
yes, if I say take profit, it'll be 2,000.
Yeah, exactly. Then you will hate us forever. And and if we tell you no hold, it'll drop back to your entry point. You hate us anyway. So lose for us. We don't have nothing to gain by telling you where to take partial there. But definitely in play today. Tesla, guys, looking very, very good this morning. Daily looks amazing as well. Definitely going to be on our list today. And I think we are pretty much set, guys. So 9:13.
See, he's getting excellent advice over there. Dylan, you got to have a plan before you get in the trade. Rustic Elegance 1, did he have a target before entering? That should tell him if you should take profit. Could also take some profit and see what the rest does. If it were me, it's probably what I'd do.
Yeah.
If it had gotten anywhere close to my target, I'd probably if it was me, probably take a partial and see how the rest went. And just like I trade other strategies, as it moves, take partials. If it comes back to your break even, get out.
Mm-hmm. Taking partials is so nice because it puts you at ease. You put some in your pocket, and you're still in the play if it keeps going like the way it is right now. So
exactly, it does not have to be an all or nothing.
There you go. All right, guys, we are all set. Brian and Andrew are going to be up next trading live for us this morning. Our recap, our list this morning: Tesla looking really good. NIO very active. Apple's bouncing off the previous day close here. Did find some support. AMD so right now. We'll see where it goes. Lucid can be very explosive. So again, it's just been stuck within this range. Had 2 good trading days last week. Outside of that, it has not done anything. This is actually more of a possible, but since we have the space, we'll throw them on there in case they're going to do anything today. So guys, thank you so much for joining us this morning. Make sure you hit that thumbs up. We appreciate it very much. It does help us out a ton here. We like to be between 250 and 300. I'm not sure what the likes are now, but if we can help us get there, we really appreciate it. We will see you tonight. It's the onboarding class for those trying us out. It's going to be at 7 p.m. Eastern time. Remember, it's no longer at 8 p.m. So 7 p.m. Eastern time. We'll see you there for the onboarding class. Have a great first trading day of the year, and we will see you guys later tonight. Take care, guys.
Take care, guys. Trade safe.